For more stock market news updates, press the like button and subscribe. With that being said, let's jump straight into today's stories. In a week marked by market turbulence, the Federal Reserve's unexpected announcement regarding interest rates has taken center stage. For the third consecutive day, the stock market has experienced declines following the revelation that Fed officials plan to prolong higher interest rates beyond initial expectations. This shift in monetary policy has sent ripples throughout the financial world, with investors and analysts alike scrambling to reassess their strategies. The Fed's decision to maintain elevated interest rates longer than anticipated has triggered concerns about the potential repercussions for economic growth and corporate profitability. Stock markets are known for their sensitivity to changes in interest rates, and the recent developments serve as a stark reminder of this characteristic. Investors will undoubtedly closely monitor the central bank's actions in the coming months, seeking clues about the trajectory of the economy. The situation underscores the delicate balance the Fed faces in navigating economic stability and inflation concerns. As we move forward, the financial markets will remain on high alert, making it a challenging but pivotal time for investors worldwide. In other news, the media and entertainment industry witnessed a seismic shift this week as media mogul Rupert Murdoch officially relinquished his role as chairman of Fox Corporation. This unexpected announcement sent shockwaves through the business world and ignited a surge in Fox shares, which rose by an impressive 3%. Rupert Murdoch's departure marks the end of an era in the media landscape. Not only did he shape the media industry over decades, but he also played a substantial role in influencing U.S. politics. His decision to pass the torch to his eldest son, Lachlan Murdoch, leaves the industry and investors alike pondering the implications for the future of Fox Corporation. This transition comes at a critical juncture for the media giant as it navigates a rapidly evolving media landscape characterized by digital disruption and changing consumer preferences. The leadership change opens the door to potential strategic shifts and new directions for Fox, making it a development to watch closely in the coming months. You should also be aware that the U.S. Labor Department reported a remarkable drop in unemployment benefit applications, with claims falling to a mere 201,000. This figure represents not only the lowest number of claims since January, but also one of the lowest in the past half-century. The data provides a glimmer of hope for the labor market, suggesting that joblessness is abating. However, caution is warranted, as analysts point to the ongoing United Auto Workers strike as a potential disruptor. Should the strike persist, it could result in temporary layoffs and reverse the trend of declining jobless claims. The labor market's resilience continues to be a focal point as the world grapples with the aftermath of the pandemic. As we move forward, the ability to sustain this positive momentum will be closely watched, as it has far-reaching implications for the broader economy. For individual stock news, technology giant Cisco has made history with its announcement of an all-cash deal to acquire Splunk, a company specializing in data monitoring and cybersecurity. This acquisition, valued at a staggering 13% of Cisco's market capitalization, marks the largest deal in the company's storied history. Cisco's strategic shift toward cybersecurity is a response to the rapidly changing technology landscape, where traditional networking businesses face formidable challenges from the ascendance of the public cloud. By entering the cybersecurity sector, Cisco aims to safeguard its future in a digital world where data protection and network security are paramount. This acquisition signifies Cisco's commitment to expanding its footprint in the cybersecurity market, where protecting critical information has become an essential aspect of doing business. It also underscores the company's agility in adapting to evolving market dynamics. We also saw FedEx, the global shipping titan, recently report robust financial results, exceeding profit expectations through a combination of cost-cutting initiatives, price increases, and gains in market share. However, the company faced a 6% decline in sales, primarily due to a slowdown in demand for shipping services. In response to these challenges, FedEx has revised its earnings forecast upward as it embarks on an ambitious cost-cutting plan aiming to slash $4 billion in expenses by 2025 through workforce reductions and consolidation efforts. Interestingly, FedEx's strong performance was buoyed by the misfortunes of its competitors, including the bankruptcy of Yellow Corp, a significant FedEx freight rival. Additionally, FedEx capitalized on UPS's challenging negotiations with the Teamsters Union, attracting nervous UPS customers. These developments highlight the competitive nature of the shipping industry and the ability of companies like FedEx to adapt to changing market dynamics. On top of that, General Mills, a prominent player in the consumer foods industry, has reported a robust 4% increase in quarterly sales. This growth is attributable to strong demand for snackable brands such as Lucky Charms and Chex Mix. Even as consumers face higher prices, they continue to support brand name products, suggesting a willingness to absorb increased costs. CEO Jeff Harmening highlighted three key themes for the quarter: moderating inflation, stabilized supply chains, and a resilient but increasingly cautious consumer. This underscores changing consumer preferences in response to evolving economic conditions. General Mills' performance reflects the adaptability of large food companies in navigating the shifting landscape of consumer behavior. As we progress, the ability to sustain sales growth in the face of economic challenges remains a key focus for both General Mills and the broader consumer goods sector. Now let's take a look at KB Home, a leading U.S. home builder, which has reported lower quarterly sales, profit, and home deliveries compared to its record results from a year ago. Despite this decline, KB Home managed to beat estimates. Notably, the average selling price for a KB Home dropped from $509,000 to $466,000 over the past year, reflecting the impact of rising mortgage rates and home prices on buyer sentiment. The U.S. housing market is currently grappling with challenges, including high mortgage rates and soaring home prices, which have contributed to a decline in homebuilder confidence. However, KB Home's increase in home orders for the quarter indicates ongoing interest in homeownership. This highlights the delicate balance between supply and demand in the U.S. housing sector and its sensitivity to economic conditions. As the housing market faces headwinds, industry participants will closely monitor these developments and adapt their strategies accordingly. You should also be aware that Cathie Wood's ARK Invest continued to reduce its holdings in Tesla stock, selling over 170,000 shares over the past week as TSLA faced a 6.8% decline. This follows Wood's pattern of profit-taking on Tesla stock since mid-June, with the total shares sold now exceeding 1 million. Wood's decision comes amid a broader market decline, with TSLA facing headwinds. However, it also reflects her ongoing strategy of actively managing her portfolio to capture gains and manage risk. Cathie Wood's investment decisions continue to be closely monitored by investors and analysts alike, as her firm actively adjusts its holdings in response to market conditions. ARK Invest made notable moves in other stocks as well. They purchased over 1 million shares of Palantir Technologies, resulting in a 1.6% increase in its stock price. While other stocks like Global E Online, an e-commerce solutions provider, received a buy rating from analysts with a price target of $50. These developments reflect a rapidly changing financial landscape, where investors navigate uncertainty while closely monitoring central bank policies, corporate leadership changes, and individual company performances to make informed investment decisions. For more stock market news updates, press the like button and subscribe. With that being said, I wish you the best of luck and happy investing.